Good afternoon and welcome, traders. It is Monday, February 5th, 2024. Good day in the market, great day for the portfolio. So market's down a bit and portfolio up to new all-time highs today. We're going to cover that. We're going to cover some of our trades. We're going to get into how we built our latest trading plan. So lots of stuff to cover today. Let me get into that and share screen with you. Let's just jump in, talk about the markets, and get my face off of here, and let's jump in. Take a look. So markets were down $15.80 on the SPX today, 0.32%. So we take a look at SPY here on the session. Just to give you a sense of where the market is right now. You've got a strong bear trend that is overextended above the 3 ATR here, hitting new all-time highs last week, especially on Friday. Today, down a little bit, but still overextended. Still, all the moving averages stacked. A little bit of a tip over on the weekly here on the MACD, but nothing to really get concerned about with one day into the first week here out of a down or a little bit of a pullback. But let's take a look at the daily, see if anything here is showing us what's interesting. And here's what I think is interesting. So you can see here on our previous highs, where we were overbought in RSI above the, and I've moved these RSIs to 75 now. And then you can see the recent high on Friday, we were not close. So on this particular high, you can see that we had a RSI reading of 75, and on Friday, we had 68. So a decent divergence in RSI. MACD may be rolling over, squeeze, maybe rolling over one day, does not make any kind of a trend at all. So nothing to really read into this. It is bullish until it's not, but he had a little bit of a tip over day today. Let's see if we get any follow through to the downside tomorrow. If we look at the, I hate when TOS does this to me, but let's move these down and get these out of the way on the session. So if we take a look at the Qs, okay, you've got dead flat MACD and RSI and squeeze long in the two. So this thing feels like it's just running out of juice on the weekly. It's been overbought, but over the overbought line's catching up. A little bit of a pullback today, but really the NASDAQ was pretty much just flat on the entire session. And if we go over here and look at the daily, I mean, finished well off of our lows of the day, bounced off the 9. It's still fairly bullish and trying to break through. So you really got a bit of an ascending and a pretty nice looking ascending triangle here. So if we break above this, you're off to the races to new highs on the Qs. So again, nothing to read into that. I'll go on it. I gotta stop clicking on that. I gotta get that setting fixed. All right, let's take a look at IWM here. On the weekly chart, you've had a pretty decent pullback last week and more of a pullback today. You've got MACD, RSI all falling, squeeze, starting to tip over. So maybe some pullback in IWM. We'll see what happens. But we did on the daily, we did give up this trend line. So that trend line, I'm not saying it's worthless now, but it's really no great value. And I think you want to start to look at where does this support line come in down here? Do we come back down and test this thing on IWM? But you've got a bearish PSR reversal signal triggered today. You've got the 9 trying to break the 21 today. You did dip below the 50 while holding it today. So overall, you're in a squeeze, and this thing looks a bit bearish on IWM overall. So IWM looks bearish. Q's ready to possibly break out to the upside, and SPY is kind of sideways moving. Looking at the amount of stocks that are trading above their 50-day moving average, it's dropped even further. So we're now down to 58% of the S&P companies trading above their 50-day moving average. That's a pretty interesting piece, at least for me, to take a look at. So something that we'll consider as we move forward here, but this is not indicating that we are at highs and overbought. This is showing that we've been just selling off here, and the lower this goes, the better the opportunity to get long. So a lot of mixed signals. You got NASDAQ poised to new highs. Got S&P, yeah, maybe getting a little weak, and IWM getting weak. Are we overextended? I don't know. With this, we're dropping down to 58% of the S&P above their 50. That's not overextended to me. So let's see how that continues to go. Put call ratio dropping a little bit more today, which is bullish on the market. We look at the US dollar on the session. We're off to the races again. The US dollar breaking the ascending wedge and triangle that we've been talking about here. We had a decent break on Friday and then a really big break today. So good, strong US dollar, which is not exactly great for the markets, and it's certainly not great for Forex. But overall, on the weekly, this thing's been moving its way higher, so it looks solid on the weekly. And on the daily, good breakout here, moving to the upside, strong dollar right now. We look at the 10-year Treasury, had a big bounce up on Friday, had another pretty good bounce today, triggering a bullish PSAR signal here on the daily. So daily, while there was a lot of downward momentum here, this thing has reversed and is jacking its way higher. If we look over here at the weekly, you got MACD, RSI, and the squeeze reversing, all fairly bullish signs. So good bullish move, increasing the 10-year yield. And if the 10-year yield increases, you can bet your bonds are going down. We'll talk about that in a little bit more as we go. Let's look at the big four futures that we follow, looking for some new trade opportunities that may exist out there. And first one is on oil today. We had a pretty big down week yesterday, and they just kind of held their own today. So up decently on the session, almost unchanged from where it opened, but dropped, was higher, and then finished a little bit up on the day. So we finished down here, we gapped up, and we've stayed up. Now, you got RSI heading lower, you got MACD heading lower, you got the squeeze running out of momentum. So this is all fairly bearish looking news here, but you've got this uptrend still intact a bit. And if we look at the weekly, it does look a bit bullish still, even though you broke this downtrend. Overall, I think we're in a slight uptrend. This is a good mixed signal. This is great for strangles. I mean, perfect. We had a great day in oil anyway today. Let's take a look at gold, see if we get any differences when we're looking at gold here. Taking a look at the weekly, MACD moving lower, RSI dipping lower, squeeze running out of juice. So this thing just struggling to move here. It's almost more of a, kind of a wedge pattern in here. I don't really know the best places to draw this thing to see if we can hit as many things as possible. But look at this wedge pattern. It's getting tighter and tighter and tighter in here. Something's got to break one direction or another. Right now, the weekly is staying down. But if we look at the daily, MACD is heading lower with RSI, but the squeeze is getting longer and longer and longer with momentum to the upside. And you're holding on for dear life to the 21 and the 50 EMAs in this triangle pattern. So either way, this thing's getting ready to move one direction or another. But overall, it's a good squeeze looking, trade and a good strangle looking trade. All right, let's take a quick look at HG here. So if we look at copper, looking at the weekly, a bit weak, MACD, RSI heading lower inside this range. Looking at the daily, MACD, RSI all heading lower. So copper looking a bit weak in here, pulling down to the 200. I like copper. I think this is, a perfect spot for a strangle on copper. Let's take a quick look at bonds. Now, we talked about rates heading back up on the 10-year. So if we look at the 30-year bond here, you've been in a decent uptrend. Now you're in this tight triangle pattern that you tried to break and you got back into. Weak on the weekly MACD and RSI, not the squeeze, but the RSI and the MACD have been a bit bearish. On the daily, you got it going the other way. I think overall, this bodes well for a decent little strangle here. So, right now, the market seemed extraordinarily confused. Okay, I don't think we've got a set direction anywhere. We've got markets up, we've got markets down, we've got the weeklies may be down while the dailies may be up a bit in momentum. Right now, there's just a lot of indecision as we wait for yields and rates and things like that to sort their way out. If we take a quick look at Forex, we do know with the dollar being so strong that we're going to be weak here. On Forex. So overall, you got 6A moving down. You got the euro moving sharply lower today. You've got the British pound moving sharply lower. And then you've got the Canadian dollar moving sharply lower. For fun, we always take a look at nat gas, which is crazy to trade. But right now, it looks bearish weekly and maybe starting to find some bottom and overextended to the downside. I'm not touching it with a 10-foot pole. Here's your 10-year Treasury notes, again, falling down weekly, but been strengthening up a bit on the daily, just sideways. It doesn't know where to, it really just doesn't know where to go. Overall, too, if we take a look at oil volatility been maintaining pretty decent volatility here. It's dropping a bit, but overall, it's hanging in there. And if we look at gold volatility on this gold, uh, it's fallen a bit, okay, but starting to find some footing in here. So gold volatility, something to keep an eye on. If we look at the sectors on the session today, the only things up was semis were up decently on the day, 4%. That thing's always up or down huge. Then you've got biotech, you've got consumer discretionary, you've got pharma, and then you've got tech up slightly on the session. It looks like we haven't updated some of these all-time highs in a bit, but tech looks okay. You know, the week is strong, the daily a bit weak. If you look at pharma, starting to, tip over after a pretty big run, but this was a good downtrend that we ran into here. Finally, maybe topping out a bit. We'll see what happens. We're in a strong squeeze. It could really start to power higher. The moving averages on the daily are pretty stacked. So pharma looks pretty good. Weak sectors on the day was your materials, XLB, your utilities. I keep doing that. I got to stop that. And then real estate down pretty strongly on the session. Regional banks not doing well recently. So overall, mostly weak sectors. And if we take a look at some of the big names out there, you've got Apple bouncing strongly after the earnings on Friday and following through to the upside today. So Apple trying to rally back in that upside. You got Microsoft down. So you got Apple up, Microsoft down. Then you got Amazon slightly down after a big breakout day. You got Meta just giving back a little bit of that big gap up. Then you've got Google, which I think is the best looking of them all, bouncing off of this this area down in here where we've been bouncing, at least on this weekly here. So this thing looks mixed on the weekly, but I think with this pullback, this could be an interesting opportunity on Google. I'm not saying jump in, get long, but I think that's interesting in here. If you look at NVIDIA, it's one of the few that continues to just run. It doesn't care about anything. It's just going to run higher. And then Tesla, it's just continuing to sell off and look weak. The weekly certainly looks ugly. The daily showing some signs of being overdone to the downside. I think this is a good area here. If we get any more consolidation, I think this is an area where you could start to potentially sell puts or put credit spreads, something along those lines. All right, let's jump into our particular account, see how that fared on the session today. We ended the day at 392 on Delta, so pretty Delta neutral, 0.09%. Theta, 1195, so decent theta, hanging right around that 0.3% mark. So theta, not too shabby. We'll take it. Net lick on the session rocked up to 418,766 here, and that set a new all-time high. So that is the new all-time high here set today. This account continues to just power its way higher. BP usage dropped a tad today. We didn't close anything. We didn't make a single trade in or out. but we did see BP dip a bit. Overall, our buying power, when you take Bill out of the equation, 56% roughly. So we're pretty well set with our buying power. I think we're right where we want to be. So we ended the week last week up 29.20. It was a good week last week. We have had nothing but positive weeks every single week this year. So far, we are down slightly for the month, and that was due to a 0 DTE trade loss on Friday. I didn't really post on Fridays because it was the weekend, but I will show you that trade here. So here's what we did on Friday. We actually had a handful of things happen. So the first thing that happened Friday was we closed an oil strangle here. So this oil strangle closed at 50% winner in 24 days for $1,290. Then we had a 112, the put debit spread expire on our LE position. So really there's not a winner or loss. We just had that expire, $700 loss there. Then we had a hedge come off as well on Friday for $14.50 on a loss there. Then we gained a bit on an oil roll on a 112 on the PDS for $7.80. And then we had a 0 DTE loser. We went the call side and we only rocked higher in just a melt up move on Friday. So we took our, I think our first 0 DTE, oops, that's an L. I think we took our first 0 DTE loss of the year. Is it the first one? No, it might be the second one. We got 2 losses this year. So 2 0 DTE losses, but overall doing pretty well on those. We take a look at the overall dashboard. Where's our money coming from or going this month? We had our oil strangle winner. We had an oil 112 winner. We lost a bit on 0 DTE this month so far, and then we had a hedge come off for a loser and a spec trade winner. So overall, just down fractionally, but we're early. It's only the third trading session of the month. So all good on this front. New all-time highs, nothing to do today. And what I want to talk about just for a few minutes here is let's talk about your portfolio and developing your portfolio goals and how I go about that and how we talk about that with our members and what we look to do. So we've got an entire course on developing a trading plan. I'll give you a little bit of a peek through one of the sections. And as we develop our portfolio goals here, I really want to just talk about planning and trading. And, effective trading, really requires detailed planning. And in this course, in this section, we dive a lot deeper into why it's essential. But trading without a plan is like setting sail without a destination. You got to have a plan. You can't just be shooting from the hip. And I see it day in and day out. We've got members just trading, most of them are learning. They're putting it together. But some of them are just posting all kinds of crazy stuff here and there, which is fine. If you're winning, great. And it makes you happy. It's all good. I'm not here to try to change anybody. What I want to do is help you establish a plan that can make you even better. Having a plan is different than having a trading strategy. Hey, my strategy is when the market's up, I'm going to, sell puts. And when the market's down, I'm going to sell calls. That's great. How are you going to do that? You're just going to do it with call credit spreads, put credit spreads. You're going to do it with ratio spreads. Those are strategies. But how do you put those strategies together to create a comprehensive trading plan? That's what I want you to think about. So this is why planning is crucial here. Number one, risk management. A well thought out trading plan is going to help you define your risk tolerance, set your stop loss levels, and protect your capital from significant losses. So you want to make sure that you've got a great trading plan that's going to help you define your risk tolerance and set stop loss levels. Just because you're putting trades on, that's great. Okay. And maybe you have a strategy of when you're going to add and subtract and close those trades, but how are you defining your risk tolerance and your stop losses? Is it based upon an overall risk management plan? If you don't have it, you need to. Another reason planning is going to, and having a trading plan is going to help you is discipline. Trading plans instill discipline by providing clear guidelines for when to enter and exit trades. It helps you avoid all emotional decisions that can lead to losses. Okay. You got to have a trading plan so that you've got guidelines for when to enter and exit trades, not just strategies. Well, I want you to avoid emotional decisions. I've seen some doozies lately, and oh, I think the market's going to do this or that, and I'm going to change my strategies, and I'm going to put a hedge on, or I'm going to take hedges off, or whatever. Do what your plan says. And I get asked in our Discord, well, our trade's up. What should we do? Okay, what should we do is read our plan and trade by my plan. It removes all the emotional decisions for me. Okay, what do we do? Look at the plan. Okay, you shouldn't be asking what to do. You should be looking at your plan. If you don't have a plan, stop trading until you get a plan. Put that together. Consistency is the next piece here. So having a trading plan improves your consistency, and consistency in trading is key, especially for those of us that are premium sellers and campaign traders. And what do I mean by that is I want trades that give me a pretty good win rate, okay? And as long as I put those trades on consistently, that win rate should play out over time, okay? If I've got an 89% win rate on a strategy, I want to keep putting it on, okay? And what I see happening is traders get into a string of losses and they change their strategy midstream. Okay, oh, I'm going to stop trading it for a while because it's just not working. Okay. If you've built a solid strategy, and I'm not a big back tester. Okay, yes, I do use it, and I'll look at back testing. But the only reason I use back testing is I don't know how I would have traded in a sell-off. You can look and get a sense of what's the positive expectancy on this trade. Is it going to work out over time? It looks like it does. So in reality, let's start to trade it and let's see how it goes. And then we can make our adjustments. Okay, but you got to be consistent. If you've got a trading strategy that's got an 80% win rate or a 90% win rate or a 95, or like our long-term one to 100% win rate, if you've got these types of strategies, then you should be putting them on a consistent basis. Okay, not ad hoc or when the mood strikes you or when you think you can time the market. There's nothing worse, in my opinion, than people trying to time the market. Okay, it's a fool's errand, and you're going to get burned. You're going to win some and say, "I told you so, Tom," and then you're going to lose some and say, "Oh yeah, you know what? You were right." So you want to stay consistent. Okay, what else can a trading plan do for you? Objective evaluation. When you've got a trading plan, you can objectively evaluate your performance against your predetermined criteria, allowing for continuous improvement. I mean, that's a mouthful. What does that mean? It means I want to look at my performance against my predetermined criteria for how I'm going to trade. I'm going to show you a little something in a minute on that. That's what helps me, allow for continuous process improvement. That's what I do in my normal day job before I was a trader, a process improvement specialist. I work with companies to improve their bottom line. Okay. Sometimes that means firing a ton of employees. Sometimes that means hiring a ton of employees. It means putting in processes. It means putting in Kaizen or lean management principles. Okay. I'm a big believer in that whole Kaizen lean management principle of continuous process improvement. And you've got to look at what you're doing. How can you do that without a plan? You need to know what your criteria was and what you were expecting to have happen, and then did it happen? And if it didn't, then I got to make some improvements. And then the last thing here, the importance of planning and trading is goal achievement. So it's your plan, your trading plan is going to serve as a roadmap to achieve your financial goals. It's going to help you stay focused on your objectives. Okay? It's a roadmap. Again, trading without a plan is like setting sail without a destination. You don't just hop in a sailboat and figure, you know what, I'm going to end up somewhere. Okay? Or, you know what, I'm going to sail west. And as long as I go west, I should run into something. Well, it depends on where you're going as to what you run into. You may run into something you don't want to run into. Heading west or heading east or what have you. It could be serious trouble. So you've got to have a plan that gives you and maps out your exact course for what you're doing. So I want to make sure that you totally understand what it takes to have a plan. Okay, put a plan together, remove emotions, give yourself the roadmap to be successful here. And I wanted to show you one more thing. So let me jump back into my my particular trading account here, and let me show you my spreadsheet piece. And we're going to scroll down to this little section down here called the Strategy Builder. Okay, and we've been using this for quite some time. The Strategy Builder lets me put in strategies and my win rates and my average profits and how often it takes me to get in and out of trades. And I can fuss with my different allocations on my buying power to figure out what my plan should look like. Okay, so I've structured myself to figure out this is what I really think could potentially happen. Okay, and if that happens, I'm going to be in great shape. So then I go up here as I look at my goals. Well, my goal last month was 11,866. It's now up to 12,000. I have a goal. I know that if I do everything correctly, that hopefully I'll end up somewhere near my goal. So I have a plan. I know exactly what trades I'm going to put on, in what ratios, in what allocations I'm going to trade. That if everything holds true, I should be in good shape. If I take a couple losses, it's all good. I totally understand. Okay, I'm built for some losses. I understand that my win rate's not 100%. I know what I'm going to achieve on each trade. You got to have a plan. You got to trade that plan. Rule number one, never trade without a plan. Okay? If that resonates with you, great. Click the like button below. Help us out here. We want to expand the channel, help as many traders as we can. Feel free to comment. I'll try to answer whatever I can out there. But like this, help us out on YouTube. If you're not a member of the Discord, go ahead, look down below in the description. There's a code that you can use to save $50 off the first month of membership. Come in, try it out, okay? And stay for the rewards. Okay, see what's going on. Tons of crazy activity. You're going to love it. There's so much different strategies and plans being put together. You're going to find stuff that resonates with you, and that's the key. So get into a great community like we have. Find the strategies that work for you, stuff that resonates for you, okay, and put a plan together that's going to get you to that destination. So you're just not sailing aimlessly across the oceans. All right. I hope you guys enjoyed this. Take care. We'll see everybody later, and stay safe out there. Bye-bye.